Welcome to the Money Talk Show TV, baby. I am your host with the most, the Money Coach. Today we're gonna talk about the short squeeze. Is the short squeeze? Is AMC going to squeeze? Hazard squalls. My take on short squeeze. Give you some facts, information, and everything I can on the short squeeze, baby. So please hit the like button and subscribe. Let's get into the video, baby. All right, short squeeze. According to Business Insider, a short squeeze refers to a stock rise in price adversely affecting investors who expect a decline. Signs of a short squeeze include heavy buying or high amount of stock shares being sold short. That's what they're doing. They selling the shares short. They still shorting the stock. Okay. Buy limit orders and hedging strategies offer short sellers some protection against a short squeeze. And that's what they're doing right now. They are hedging. The hedge funds are hedging. Okay? They're hedging against us retail investors. The H, baby, on AMC. That's why you see at certain times, you see a certain amount of volume, actually the same amount of volume, decreasing around the same average of times at the end of the day to keep that price down. They made sure we did not hit that $60 mark the end of Friday's trading day, baby. Okay? That's what they did. That's what's hedging, boy. Okay? They okay? Short squeeze. What is a short squeeze? A short squeeze is an unusual condition that triggers rapidly rising prices in the stock or other tradable security. For a short squeeze to occur, the security must have an unusual degree of short sellers holding positions in it. The short squeeze begins when the price jumps highly unexpectedly. The condition plays out as a significant measure of the short sellers coincidentally decide to cut losses and exit their positions. Okay? Pretty much all that sums up to is that you have hedge funds shorting the stock constantly. They put in short positions against us retail investors, baby, and they continue and continuously adding, doubling, tripling, quadrupling down on AMC to get short sale, baby. And we're not going for that. We're not going for that. No, we're not going. They put fake shares in through the dark pool. We're not going for that. Key takeaways, all right? A short squeeze accelerates the stock price rise as a short seller bail out and cut their losses. So that's what we're trying to do. The gamma squeeze is what we're saying is when all those contracts goes as in the money. ITM, baby, in the money, okay? They would have been a lot more in the money if we'd hit that $60 mark, but we didn't make it. So therefore, all 59 and below is still a decent amount. Once those trigger that they have to buy those contracts within the 100 shares per contract, that's going to trigger some of those hedge funds, and hopefully we get a big whale out of their position to have to margin call. And hopefully they get up out of their position. And once one bail out of their position, then the other one gonna bail out of his position, and then the other one gonna bail out of his position, and force him out of his position. And we'll get that domino effect, baby. That's when the stock rocket gonna go up to the moon, up to the moon, to the moon, baby. It's gonna go up there in the air. Okay, that's what we're waiting on. So it can go to 100 plus. It already hitting the $75 mark like it was nothing. Okay, and that was not the short squeeze. So therefore, its potential is unlimited. We don't know the exact amount of how many short sellers are still putting in fake shares in the market or doing what the win. All right. Investors try to anticipate a short squeeze and buy stocks that demonstrate a short interest. The short interest of AMC is still high. Okay. That's why we continuously buying some investors. This is not financial advice. I am not no financial advisor. This is just entertainment and let you know what I'm doing in the stock market, baby. But that's why we anticipate the stock gonna go up. And that's what we believe. We know it's gonna go up, okay? and we just wait. It's all a matter of time, baby. It's all about patience. It's patient games. Both short sellers and investors are making risky moves. This is a high risk, high reward play. AMC and GameStop, high risk, high reward, baby. Okay. But if you notice, my cost average is $8.80 something cents. So therefore, I'm good in the hood while drinking your juice. I'm just waiting on the rise, baby. A wise investor has additional reasons for shorting and buying that stock. That means we know the short interest is high. We believe that they are still shorting the stock. We believe there are a limited amount of shares of AMC that is being manipulated through the dark pool. Okay, now that you know what a short squeeze is, I gave you an example of a short squeeze. Maybe let's get a little bit more understanding of what a short squeeze is, baby. Okay, understanding a short squeeze. Short sales have an expiration date. Okay, that's why it's a certain amount of time. That's why we're not sure on exactly when it's going to go to the moon. Okay, so when stock unexpectedly rises in price, the short sellers may have to act fast to limit their losses, baby. Okay, that's what happened last time in around January, February, when Robinhood shut us down. They took off the buy button, baby. They only had the sell button. That was wrong. I was right there in the midst of that, baby. In the midst of that. That's why this is this is personal, baby. This is personal. Personal. Okay? It's personal to me. Very personal. All right. But short sellers continue to borrow shares of asset, which is AMC GameStop, that they may believe will drop in price in order to buy them after they all fall. If they're right, they return the shares and pocket the difference between the price and their initial that when they initiated the short and actually sale price. If they're wrong, they are forced to buy at a higher price and pay the difference between the price and a set and its sale price. That's why we're saying that we can set the price if they count the shares and realize that they have put so many fake and satanic shares up into the market that the ones who actually own shares like me, you know what I'm saying, and people who AMC investors and holders, shareholders, boom, that means that, hey, oh, they've cheated us. The stock price should go up, okay? Because short sellers exit their positions with buyer orders. That exit, these short sellers pushes prices higher. So that's when they get up out of it. That's what I'm saying. It's like a domino effect. It pushes the price higher, 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 higher. They go bam, 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 boom to the moon, okay? Short sellers zero in on a stock that they think is overvalued by the market. Okay. And there's nothing wrong with short selling. If you believe that stock is gonna go down, I shorted some stocks, not short it, but I have placed some puts, okay, on some stocks. Okay. And I haven't shorted the stock, but I placed some puts when I believe that stock will drop. Bam. Okay. But when you creating fake shares, that's a whole nother ball game, baby. You take it to a whole nother level. You doing something. Let's level out the playing field for investors. All right. For example, Tesla captured the enthusiasm of many investors with innovative approach in producing and marketing electric vehicles. Investors bet heavily on its potential. Short sellers bet heavily that it's going to fail. In early 2020, Tesla was most shorted stock in the United States Stock Exchange, okay, with more than 18% of its outstanding stock in short positions. That's why Tesla blew up like that, because it was so heavily shorted, and so many people like me and you thought and was Tesla fans and investors that kept putting money into the stock, and they kept saying the stock is going to drop, and the stock kept going up, and that means boom, it just bam. Next thing you know, oh, Tesla skyrocketed, baby. Okay, let's go. That's why I said you got to get into the market, baby. Stop playing games, get into the stock market. And you can't get into this. This is history right here. History to make it. And your boy, the money coach, is part of history. And I'm blessed to be an investor. Okay. All you got to do is just, man, you can get some change from your piggy bank, your fund. You can just download Robinhood for free. You just get into it, get started. You know what I'm saying? Just gotta get a little feel of it. You know what I'm saying? Get you some paper trading accounts. Man, come on, you got Weeble, you got paper trade, and they give you $1 million to play with. That you can just buy all the AMC, GameStop, whatever stock you think it's gonna go to the moon. You can buy that with $1 million with Weeble paper trade. Fake money. That way you can just see it and understand how you would have done if you would use your own money. Get to the game, baby. Do your research, baby. All right. You're probably asking yourself, why does short squeezes happen? Okay. We talked about the short squeeze. Now you want to know why is it happening? Okay. Because those hedge funds keep on and continuously putting bets on AMC to go down. They keep dropping it. They keep doubling down, tripling down. Okay. As noted, short sellers open positions on stocks that they believe will decline in price. However, sound their reasoning, it can be appended by a positive news story, a product, a product announcement, or an earnings beat that excites the interest of buyers. Okay, for example, AMC they trying to take over multiple movie theaters. All those movie theaters that got crushed down and sit there vacant. They trying to ante up, baby. Let's go. They got money. They raised a lot of capital. That's why they did share offerings. Okay, it's another example. They increase their debt, decrease their debt. Excuse me, decrease their debt. Their numbers looking good in the financials, baby. So they've done a lot of things. Okay, the turnaround in the stocks futures may prove to be temporary, but if it's not, the short seller can grace away and run away its losses as the expiration date on their position approaches. They generally opt out to sell immediately, even when it means taking a substantial loss. That's what I mean. They're going to have to take a loss, okay? For example, right here with the Tesla, again, 18%. The percentage of Tesla stock that represented short interest in the late 2019, its stock price quadrupled and short sellers lost billions. Since they continued to bet against Tesla, they lost billions. And Tesla is still a beast. It's still a monster. It's down right now in the low 600s, but I'm still a Tesla investor. I'm still going to put money down on Tesla, baby. Okay. So now let's get into betting on a short squeeze. Contrary, investors may buy stocks with heavy short interest in order to exploit the potential of a short squeeze. That's what we're talking about now. That's why we're seeing and share AMC investors information, because we want to get the word out to new investors or investors who are already in AMC to get the word out, baby. So hey, it's a chance of a lifetime. They could squeeze and squeeze rapid. This is not financial advice, but hey, just let you know. A rapid rise in the stock price is attractive, but it is not without risk. It's very risky, as I get into this. It's a high risk, high reward. The stock may be heavily shorted for good reasons, such as dismissal of future outlook. Okay. Yes, before the pandemic before the vaccine and stuff, AMC was looking very harsh. It was looking a little rough down there in the $6, $7, $2 mark. You know what I'm saying? $3, $4 mark. It was looking a little rough. It was getting beat. Bang, 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 bang. Getting beat up. Okay. The financials looking good. They had a lot they had a lot of debt, but now they done flipped it around. Okay. We hit them with the short squeeze earlier last year or beginning of this year into that. And then now, during that time, they have raised capital and done so many things that the stock is not what it used to be, baby. The stock ain't what it used to be. And now people are going back to work. They're going back outside. Everybody back outside. People going to the movie theaters. You know what I'm saying? So, hey, we in there. Now they are at risk of trading short squeezes. Okay, there's some told you about that. You got to know the risk. They are at risk. It's a high risk, high reward play. There are many examples of stocks that move higher after they have a heavy short interest, but there are also many heavily shorted stocks that then keep falling in price. So therefore, I believe, once AMC goes up to the moon, it's gonna skyrocket. It's definitely gonna fall hard. And in the meantime, while it's going up there to the rocket, it's gonna have some crazy volatile moves. It's gonna move up 20, down 30, up 40. You know what I'm saying? It's going to $10, $20, $35. How much it goes up, it's going to move crazy. It's going to be beast. It's gonna be nasty. So that's why you can get in it while it's low. Oh, ride up, get up out that guy. Get in again. Oh, ride it up. So and day traders gonna come in. They gonna smash up on it. They gonna eat up on it. All the people who the fear of missing out, they gonna come in and eat up on it too. All we gonna do is keep on. And we done made our money off of call options and the stock or whatever. Still, we still eat some more and some more, and it's gonna keep on growing, boy. And then we gonna just eat while it's going down. I'm gonna eat while it's going down. Okay. A heavy short interest does not mean that the price will goes up. It means that many people believe that it will fall. Anyone who buys in hopes of a short squeeze should have other and better reasons to think that the price of the stock will go higher. Versus than anybody just on YouTube, like listening to me or anything like that. You can have your own reason, do your own research, and have your own risk money when you're talking about AMC and GameStop right now. Okay.